Stanford University.
I guess, how many of you have started a business when you were younger? So Steve from Foundation Capital also started one, and he carries his business card around him all the time from his snowblowing business. So he's currently a partner at Foundation Capital, and prior to that, he helped launch Ning, which is a consumer internet service where anyone can create their own social network. Prior to that, he also worked at IDEO and helped design products for Cisco, Nike, BMW, McDonald's, Caterpillar, several companies. And he also currently holds 28 patents. And what I found really fascinating was that he won Business Week's Design of the Decade Award, as well as several other awards specifically focused on product design. And he graduated with a BS in mechanical engineering, as well as an MS in mechanical engineering from Stanford and an MBA from the business school here. So really excited to have Steve, and thank you so much for taking the time.
Thanks, Ernestine. All right. Welcome, guys. So you guys just got started, right? Last week was the first week of classes back, is that right? Cool, awesome. All right, well, and thank you, Tom. Tom, by the way, when I was here at Stanford, Tom hadn't started yet, but we've gotten to know each other through a number of different things, and he actually helped me last year, about this time of the year, when I was teaching an Introduction to Entrepreneurship class to 7th and 8th graders at my daughter and my son's school up in Hillsborough, and I was fascinated by that process. I probably learned as much about them as they did about entrepreneurship, and Tom and some of the resources he's pulled together were just totally invaluable, so thanks again for that. That's really great. So anyway, when Ernestine originally asked me to talk to you all, I saw sort of the template for what you guys are about to cover, and it's this notion of starting off on the right foot. I'm a lefty, so I didn't think that was necessarily a fair thing to have to be right-footed. Where are we? Here we go. So, and I think ultimately I have a bunch of things that would be fun to talk about, but I'm going to try to sort of stick within the framework that she suggested. Maybe the real title is My Reflections of a Reformed Entrepreneur. So I was an entrepreneur for about 15 years before I found myself on the investing side. I started my career, as Ernestine mentioned, at IDEO. I was a grad student over in the engineering department. And really by luck met David Kelly at a seminar, and he was then one of my professors. And after my design project one, for those of you who have taken ME 101, he's like, you need to work at IDEO this summer. I said, what's IDEO? So I worked at IDEO for that summer and then was there for about 5 years, leading projects, working as an engineer on projects, doing lots of fun things. That's what's kind of beautiful about that organization. It's changed quite a bit since I was there, but it's still a very special place. I then went on to run engineering at a company called Immersion, which was a Stanford spinout in robotics. Was a classmate of mine from my graduate school days. Sort of found myself compelled by all the things with respect to technology and user-centered design, but sort of left itching for some of the business side of the equation, and decided to apply to Stanford Business School. I think I was 30 when I applied. I was probably among the top 10%, oldest 10% people in the class. Then after that, and I'll talk a little bit maybe more about that experience afterwards, but then found myself as a VP of product and first employee at Ning. Mark Andreessen was just starting the company as I was leaving business school. And I was actually starting a company and trying to raise seed capital for it. And so I was introduced to Mark as a potential investor. I didn't know he was actually looking for a head of engineering for Ning. We were calling it 24-hour laundry at the time. And he kind of won that conversation because I ended up being, his head of engineering and product, and I didn't get his check. Ran engineering there for a couple of years, and then decided that I wanted to do my own thing. I was an EIR at Foundation and found myself on the investing side. So I'll sort of pause there, and then we'll kind of dig into the talk, and we can kind of come back to some of the specifics of my experiences in a little bit. Just very briefly on Foundation, so we're about a 17-year-old firm. The firm actually sprang from the ashes of one of the preeminent firms of the Valley from the 80s, and begat two firms, Benchmark and Foundation. So they're sort of our sister firm, as it were. We have roughly $2.5 billion under management, and we invest broadly across all areas that you would be familiar with: IT, software services, consumer, a bit of clean tech as well. And if there's a skew that we have, it's definitely towards the earliest stage. So roughly 2/3, in fact, a little bit more out of our last fund, we were the first institutional investors in our companies. So, in fact, of our portfolio of about 50 companies in our current fund, 80% of them had no revenue when we invested, and 80% of them have revenue now. So it's a roughly 5-year-old fund. And then just some companies you might recognize, some Stanford spinouts in here. Financial Engine's a fun one, went public about 2 years ago. It was founded by a Nobel laureate from Stanford, a professor, still run by the founding CEO, who is a Stanford grad school student, Jeff Madge, who's just an incredible individual. Of course, Netflix, Reed, and Sunrun were 2 classmates from the business school, 2007, a few years behind me. And a whole bunch of other companies across all sorts of different sectors. Atheros is also worth noting. It's kind of in the infrastructure layer, but was really the inventor of Wi-Fi chipsets on CMOS. And they were acquired by Qualcomm about almost 2 years ago. Was founded by Stanford professor Teresa Mung, just a fantastic and formidably smart woman who I used to sit in her desk and think that I was absorbing some of her wisdom. Just a really special person. I talked a little bit about my experience prior to coming to the business school, and I pulled this out of my application for business school. So I didn't doctor this up. This is literally the document. So there's 2 essays at Stanford Business School. This was essay B. I don't remember exactly what the question was, but I pulled this out and pasted it in here. And by the way, this was also before the D school, so I teased David Kelly about this because this was sort of how I described myself when I was about to turn 30 years old. I had been at IDEO, as I said, for 5 years, and this other startup running engineering for about 4 years. And I sort of felt like I had this sort of covered the whole notion of like users' needs and wants and desires, and like this answering this question of like, does anyone want these things? Like that's what I learned at IDEO, a sense of empathy for users. I worked on some really hard problems both at IDEO and even more so, I would say, in terms of in the technical domain at Immersion, which was sort of making these very inexpensive components do really magical things. The whole kind of field of force feedback was what was invented there. And this whole sort of sphere of technical constraints, kind of can you build it? Can you solve that technical problem was something I also felt like, wow, I'd been doing engineering for a while and solved some pretty hard problems. I felt like I could do that. And I felt like there was this hole, however, and part of it was I watched and witnessed through IDEO, the lens of IDEO, as well as Immersion, I watched some projects that just failed. They were very cool technically, people liked them, but in the marketplace, they were stillborn. And I was frustrated by that. I only had one of those at IDEO. It was actually early in my career, and I committed to myself I would never let that happen again. In fact, the product is still, I think, in a closet somewhere in Grand Rapids, Michigan, in this company that we worked for that invented all these things and never commercialized them, and it was very frustrating. But I saw this happen at Immersion as well, and I saw engineers work on problems that were ferociously hard, like really, really hard problems that never needed to be solved. Like there was no user to ever want these things, or the set of users could have been counted in our building plus maybe another 100 people. In fact, there were days when we had literally negative revenues because there were more returns of the product than there were sales. I'll never forget seeing that. It wasn't a product I worked on, and it's long gone. And again, it was sort of a technical feat. But I learned that there are questions that need to be answered around business needs, around whether there's a business model that can be built around the company, whether that business can actually be long-term sustainable. And this is how I positioned myself when I applied to Stanford. I was like, hey, I got 2/3, but I need that other third. And there's something magic clear that happens at the center of these Venn diagrams. And so that's kind of me in a nutshell. And I'm sort of always looking to get at the center of the Venn. And I would encourage you guys to sort of think and probably have some frameworks of your own. But I don't know, I like Venns. Maybe they're sort of simplifying constructs, oversimplifying at times. But anyway, just coming to really what I think you all are starting to dig into, and what Tim and Ernestine asked me to talk about, this sort of notion of getting started on the right foot. And I thought I would share with you, at least initially, sort of what are some of the ways that at least venture capitalists evaluate businesses. Now, more than half of businesses don't ever take venture capital. So it's sort of perhaps inappropriate for me to sort of use a filter that only applies to some companies. But I think it's worthwhile, and it's sort of a nice point of departure for maybe some of the other things that we'll talk about as well. But these are the sort of 5 questions or topics that come up, and they're oftentimes written into your business plans. And you, as entrepreneurs, sort of hopefully lead the witness down this sort of big market, at least $1 billion. I mean, you kind of know probably, or have heard some of the numbers that sort of tie to some of these constructs. But this notion that sort of the market size matters a lot, the team and their appropriate, the sort of their fit to the appropriate technology in the market itself. So you may be a brilliant individual with an incredible background in healthcare, but you're trying to apply yourself into the clean tech domain. You may be a brilliant individual, but not necessarily a good fit for that market opportunity. Or you may be working on a product that's outside of your sphere of domain. But we spend a lot of time thinking about team and whether good teams can actually sort of find great markets if their first market doesn't make sense. Of course, the product and the technology matter a lot, and that's sort of the manifestation of your idea, of your insight, and the notion of the product market fit, as it's often called, is something where when there's evidence, we look for it. If it's pre-product, we're relying on our instincts quite a bit, but that's something that we'll talk a bit more. I'm going to deep dive on each of these. This notion of the path to market, the distribution channel, how you're actually engaging your customers, whether those are end consumers that are finding you on the App Store, or whether those are enterprise customers who you need to go interact with and sell in a kind of one-on-one basis. And then, of course, the business model, how are you ultimately going to make money? Are you thinking about that? Even if you don't have a business model today, have you begun to sort of build some assumptions and challenge those assumptions? I sort of have the 6, which is the secret one, of course, which none of the venture capitalists, or rarely do they talk about with the entrepreneurs. But we have a job as well, and that job is to generate great returns for our investors, which, of course, include many great universities like Stanford and Harvard and Yale and others. But this notion of getting a good return on a dollar invested matters a lot in the venture capital business. And we are, as early stage investors, are oftentimes looking at, okay, what is our expected return? How can we visualize sort of getting in the earliest stages 10x, 20x, 50x. This is definitely a business where it's the winners that really dominate. It's fascinating to sort of see how Facebook's returns last year just skewed all of the numbers in the venture capital industry because it was just so far off the distribution. And it's those winners, it's those whales that you're really looking for. And so we have to see that. We also have to build models assuming that things don't always work out, or that the companies grow slower, or hit the inevitable snags that all companies do, and sort of what's the impact of 2 more rounds of financing if it happens. And so that expected return is maybe not something that the entrepreneurs spend as much time thinking about. I think they are more and more today because folks don't want to get out ahead of themselves and have to suffer a down round down the line. But that's sort of maybe the 6th filter, as it were. To apply these things to your construct, what you guys sent me, problem, solution, team, motivation, I thought I'd at least attempt to sort of take your framework and run with it. Problem, of course, I've renamed opportunity because I do believe that is most often the case. Let me talk a little bit about each of these, and then that'll hopefully galvanize some thoughts and questions and dialogue. I flip them around, first of all, because I actually think motivation is probably the most important thing for you all to consider as you think about your own startups or your own interest in entrepreneurship. And I think it's profoundly important for you to start with a clear understanding of what your own personal goal is as the founder and as the entrepreneur. I think, when you're at Stanford, and I used to joke with my business school classmates, I don't remember what the statistics are, Tom, you might know them, but more than 40%, I think it is, of incoming Stanford Business School students assert that they want to be entrepreneurs. And when you look at the other side, when they come out after they graduated, at least in my year, it was maybe 10 or 15 folks who had started something. And so part of that is they learned along the way, in a good sense, that maybe it didn't make sense to start a company. And I think that understanding for yourself sort of what is your goal is going to be a really clarifying and important part of the process. Because being an entrepreneur, turns out, is really, really hard. How many of you all were entrepreneurs before, started companies? Yeah. It's hard. Sums it up. You're recruiting folks when you don't have a balance sheet. You're trying to convince people to work for free, your lawyers to work for free, to incorporate you before you have capital, customers before you have a product. It's such a challenging experience. Of course, if you're able to kind of punch through that, it can be hugely rewarding. And of course, then you stumble, and then it's really difficult again. And then if you're able to continue to grind along, good things can happen if you kind of achieve some of the things we'll talk about. But I don't want to sort of underestimate or underemphasize this point, because I also think it's important. There are lots of different reasons to be an entrepreneur. Some people want to be an entrepreneur to work with their friends. Had an entrepreneur meet with us last week who said, that's the best thing about being in a startup is I get to work with my friends. And I'm like, probably not a fit for us. But you might do it for flexibility. Some of you just might want to have your own business so you can work different hours. Some people have just realized that it just doesn't fill their tank to work for the man, and they just want to work for themselves. You might want to just do it to become rich. There's lots of reasons to be an entrepreneur. Know what is your reason, and don't confuse it down the line. Don't get pissed at yourself because, like, oh, I didn't get rich, but really I did this because I wanted it to be about flexibility or working with my friends. Just make sure that you remind yourself of that early in the process. In terms of motivating yourself and your team, these next 2 points, I sort of joke kind of in the process of writing an op-ed around how parenting of children is a lot like parenting of companies. And I think the Lego post was, I saw you sort of suggested, I'm guessing some of you may have seen that. But these next 2 things are really, as they apply to being a good partner or a good parent as much as they do about being a good entrepreneur. But if you're trying to build a culture around you, you really have to model the behavior that you're hoping to instill into your organization. And that the motivation is part of that. Are people sort of working to achieve some great goal that is sort of transcends the economic reward? If that's how you act, then you're more likely to recruit folks who act that way, and when they become a part of your organization, to act that way. I think there's a related point around the journeys and destinations. I think I always joke with people, because when I see entrepreneurs who are like just exhausted, and it's the VP of engineering or product person who I'm usually first introduced to, and they're like, yeah, I'm just like 2 weeks away from launching the product, and as soon as we get this out, we can have lunch. And I'm like, you don't understand. Like, as soon as you launch that product, everything gets harder, right? Like, the feedback comes in, bugs you'd forgotten about. I mean, if you thought you were on like a merry-go-round before and it was going too fast, like, trust me, it's going to be just going even faster. And I think occasionally talk to my CEOs of companies that are a little bit more mature, and they think about, and particularly those who have never done it before, think about IPOs in the same way, like, oh, if I can just get this company public. It's just another financing round. I mean, seriously, it's like the most successful companies that the IPO was so long ago, and they don't even think about those challenges. It changes perhaps the way people think about the economics of the outcome. But again, everything gets harder. And so building an organization that thinks about the process, about the journey and that sort of constant self-improvement, as opposed to one that's kind of gunning for the next deadline, is a really important thing. And by the way, my youngest one is over at Bing, and Carol Dweck, who's sort of the head of that group over there, she studied and practiced most of her work at Columbia, sort of has discovered how kids who have this sort of what's called growth mindset, this notion of sort of constant self-improvement, as opposed to sort of being celebrating the first handstand or the A+ paper, these kids who have this notion of deferring gratification and sort of focusing on the process and celebrating the difficulty of the process and pushing through that, are just happy. They're happier. They achieve more in the course of their lives. And I think organizations we'll see a similar analog there for companies that focus in that way. And then the last point I'd make is just, again, sort of figuring out, back to this point, why are you doing it? What's really important to you? And measure that. If flexibility was that most important thing to you and it was the reason why you started the company, figure out a way to measure how flexible your life is. And then give yourself a dashboard and tell yourself how you're doing, because it'll remind you, and if something else is the goal, then you'll be reminded of that as well. So this notion of really closing the loop with some measurement. Let me talk about the problem now. So as I said, I flipped it around. So motivation was number one. The problem or the opportunity, as I asserted, obviously matters a lot. And I think so many startups start with this notion of need finding or solving a problem that whatever, you hate the way this thing works. You're tired of the shower curtain touching you every morning because of the Bernoulli effect, or there isn't a cool enough app to find your friends when you're out in San Francisco. It's definitely the case that a lot of things, a lot of companies are created by this. What's the problem here? Keep in mind that so many problems, particularly the ones that maybe are easy or they kind of are obvious to you, they've been thought of, or they've been stumbled across before. And this notion that like your idea is sacrosanct and don't share it, and I'm only telling people kind of under the radar, oftentimes. It just doesn't matter. Eric Ries talks about it in his book. Like he challenges many of the folks he meets with. Like, I challenge you, go tell everyone about your idea, and see if they build it, because most times they don't. And it sort of suggests that thinking about that, how big is that problem? There are lots of folks who have worked in these areas for a long time. Big companies, as I say up here, are pretty darn good at what they do. So the idea that some pipsqueak company coming out of Stanford working in some basement is going to be able to disrupt their market, it's hard to do that. It's really hard to do that. So keep that in mind, and it'll speak to sort of the solution I talk about later. With that said, there's massive tectonic shifts happening. Sometimes they're more obvious than others. I think right now we're underway in this true mobile renaissance. I mean, there's just so many neat things happening in mobility. We saw a bit of this in the early 2000s. Obviously, BlackBerry lived through that sort of that wave, and Good and Avisto, and so many companies were built on that. But now we're seeing something different happen, and you could argue it was enabled by the iPhone and the opening up of a platform, the fact that it's much easier to originate customers cost effectively. The fact that the broadband is pervasive at very high speeds. I mean, there's a lot of reasons why mobile has changed, and those industry shifts create massive opportunities for startups. And I would be thinking about those as you sort of expand away from just the need or the interest that you have. And then I encourage you to remember the Venn for yourself. So I think it's absolutely the case, and it was never captured for me this way, but when you find something that you're good at and that you're passionate about, you love doing it, so it doesn't feel like work. It's like it just kind of, you get in the flow very easily of it. And that thing, by doing more of that, you solve a meaningful problem. That's sort of, for many people, that center of the Venn. Like, big enough problem, if I work on this, something good will happen. I'll create a product or service that somebody else wants. And I didn't even know I was working while I was building it. Like, that's something special. So individually look for that kind of center of the Venn for yourself. And I think that sort of alignment of passion and talent, like true talent, like be honest with yourself. Like, am I like the best 10% or the best 0.1%? Because that's where special things happen. I will say one other thing about the problem, because I used to debate some folks that I've worked with on this. It's notion, it's why I sort of don't like the problem frame, but it's this notion that sort of necessity is the mother of invention. I think for some of the things that have been most disruptive in all of our lifetimes, it's actually the other way around. It's that the invention is the mother of necessity. It's like there's something completely new that wasn't expected, that wasn't an iteration on or a sort of marginal improvement upon something that already existed. It's something that, could have just dropped from the sky and felt like it changed the world, and then it becomes something that you can never live without. Those are the things that are really special. They create new markets. There wasn't a market that someone was chipping away at that already existed. It was something that just dropped in upon us. And those are, for sure, some of the greatest outcomes. Obviously, in personal computing, we've seen companies like that. Social networking is probably the most recent wave. And I think that sort of, keep in mind that notion of the thing that doesn't exist, that could be a massive market hidden in plain sight, or is waiting for the right distribution, or is waiting for the right piece of technology, is a pretty exciting thing to go after. So now that I've killed problems, maybe solutions for a couple minutes. For me, the solution is the product frame or the technology frame, and I'm a product person. I can't get that out of myself as much as I overlay other things, interests, and frames on it. But what I learned early in my career from Stanford Product Design Program, and certainly reinforced at IDEO, is really assuming that you might have a great idea, you might have this product concept or this service concept, but as Colin Powell says, like, no plan survives first contact with the enemy. Like, you got to go engage your customers, you got to go pull people in, you got to build the thing that you thought was compelling, but then show it to the 10 smartest people you know, and they'll tell you all the things that are wrong with it. And I think that speaks to these first 2 points. Really build a plan with conviction, but assume that pretty much everything's going to change. And it's been framed as sort of argue as if you're right, but listen as if you're wrong. That kind of mindset, I think, is something that's really important as you're building your product. And this notion of enlightened trial and error is actually an IDEOism. Unless you're Einstein or one of these incredible savants who's able to sort of see things 100 years ahead of yourself, it's absolutely the case that most great companies are built with teams that complement each other. And so this notion of enlightened trial and error by groups of individuals as opposed to flawless intellect by one genius. The third point's probably a little bit controversial, because I think Silicon Valley was started in so many ways built on top of proprietary technologies, intellectual property, things that couldn't be copied easily. I think that's true in some ways, and in fact, I was having a conversation with one of my partners yesterday about how we're kind of bored with so many of the things that are happening in the application space today, because it doesn't feel like there are that many entrepreneurs who are working on really hard problems that could change the world. And so many of the things that, when Charles and I were in operating companies, that we sort of predicted as the future, feel like they've come to pass. And so we're sort of joking with each other in a car ride up to the city that sort of feels like we need the recharge on what's going to be the next sort of 10-year focal length set of interesting ideas. But what I do think is happening in the meantime is that this notion that other things are filling what used to be the sort of technological barrier to entry. So you used to have some proprietary algorithm, or you used to have some ability to build this chipset in a way that was more cost effective than somebody else did. But I think where the barriers to entry are becoming more and more pervasive have to do with distribution and empathy. I tie this back to my IDEO experience as well. Building products that engage users, that people want to come back to, interact with, not once in a week, but 5 times a day, comes from having a sense of empathy, a sense of what it feels like to be a user who's never approached your product, ever. And everything about it, but they don't know what you're doing. And that very fundamental sense of the human condition is being baked into more and more great products. I love seeing the diaspora of great interaction designers, and I feel like design and user interaction is coming into the fore. We're seeing companies being founded by these kinds of individuals and entrepreneurs. And I always sort of struggled with folks who thought you could just kind of add a designer as if it was a service organization, and that's just not the case. The companies that do this really successfully built design in and a sense of empathy for users from the beginning. It's like born into the marrow of these successful companies, and I think that's going to be something that stays with us for a while. And then my last point would be around sort of what I, as a product person, see as sort of patterns in great products, and then also in great organizations that build great products. Diego Rodriguez and I were at IDEO as contemporaries. He's back there after going to HBS. And we used to joke about products as, great products as fractals, that there was this notion of sort of repeating patterns, that the decisions that someone was making on the inside of the product about sort of the radius around how the PCB was attaching to the main chassis, that someone cared enough about that decision that no one would ever see, was similar to the kinds of decisions they might make on the product and the box that it shipped in, and how they hired people, and this notion of sort of repeating patterns, no matter what the scale was. And of course, that's what a fractal is. And a beauty in products and organizations that sort of self-repeat in that way, where the most junior hire is thinking about the sort of values of the company in the smallest decisions that they make. And then, of course, the flight analogy. Remember when I learned about Wiley Post and how he discovered the jet stream, and like, wait, when you get in the jet stream, you're actually your energy output is being reinforced by the fact that you're in this flow, right? So in fact, when he discovered it, he's like, wait a minute, my airspeed and my ground speed are off by like 100 knots. How the hell is that happening? And I think successful businesses, when they get in the jet stream, when they figure out, oh, it's this sort of path to market, that's when good stuff happens. And I think looking for those jet streams is and not being satisfied till you find them is a really important aspect of engaging the market and of successful solutions or products, as it were. And then team. So we talked a little bit about what motivates you. That obviously has a huge impact on the kinds of people that you recruit, you surround yourself with. Joel Peterson, who was one of my professors here at business school, has this framework which I just find to be sort of the most helpful in this regard. And he talks about sort of this ladder, this sort of hierarchy of organizations that motivate people, ranging from fear, like I literally put a gun to your head and say you have to go do this. Force, which is sort of maybe only one. Force is I think it's maybe the bottom of the pyramid, where I literally require you to do something. Fear, where you just feel like, oh, if I don't do this, I'm going to lose my job. Duty sort of being the next level up. It's like, yeah, I feel like I owe it to the group, I owe it to the company to do this. And then the top tier is you're doing it out of love. You want to build something great. You're compelled by something greater than shipping a first product. And you feel a sense of connection and a sense of purpose and mission around the thing that you're building. And I think organizations and entrepreneurs, if they think sort of in this notion of, do I want to be kind of at the love or reward end of the spectrum? I think I've seen sort of just more successful companies that are able to live in that domain, where they hire really great people around them. With respect to potential and pedigree, I always hired people in startups that I worked with, and maybe it's because I sort of felt like I was this way coming out of IDEO and then in my first few companies. But I always hired for people who I felt like had high potential. Like they hadn't done the job yet. They hadn't been a VP of engineering. Maybe they'd been a director of engineering, or they were a superstar manager. And yet they seemed very hungry and motivated and compelled to prove themselves. They were hungry. As opposed to hiring the person who's had the job 3 times. And I have a really hard time doing that, because I feel like oftentimes they may be the right person for your company in 3 years, but you may never get there because they can't help you do the job you need to do today, which is oftentimes more about being a player and a coach simultaneously. Ties into this sort of notion of hiring talent and renting skills, very specific things that you may need in your company. To whatever extent you can, it makes a lot of sense to to use consultants or think about the resourcing of those projects differently. And then, the thing that I think all entrepreneurs underestimate, or just frankly haven't experienced, is after you've got your initial concept underway, and you may still be searching for product market fit. You may have achieved product market fit. Very quickly, everything you do becomes about recruiting, about surrounding yourself with even better people. And I just remember I would do my day job of trying to sort of keep things on the rails, and my night job was spending time on SourceForge, trying to find the most prolific developers. GitHub today, LinkedIn, as it was sort of emerging, just crawling, trying to find the people that could be the next superstar engineer or interaction designer or hire in our organization. And then the last point, of course, is choose your investors wisely. You'll be living with them for a long time. The average time to liquidity on most venture-backed companies is closing in on 10 years now. So it's a relationship you need to be very mindful of how that comes together, and I think look for characteristics that reinforce the culture you're trying to build, but simultaneously challenge you in the right ways, because that's how you'll move the ball forward. So I'll sort of maybe wrap things up or converge on a couple of sort of summary points across all of these. If I look at, and as I said this before a little bit, the largest opportunities that have created the greatest outcomes for entrepreneurs and the venture community as well, they've come from markets that didn't exist before. They came from new opportunities. And I think oftentimes folks use that frame of what's the market size today. That may be the wrong question that you're asking. And in fact, it's the potential of that market. It's the rate of change of that market, because old markets with incumbents are really hard for startups to win. I see this in some of our clean tech companies where you're trying to beat an industrial supply company. Well, their channels of distribution are mature. They have hundreds of years of relationships with lots of executives. They have distribution in all geographies, and it's really hard to kind of punch through the noise and the history of those relationships. So look for markets that are growing really quickly. They may not exist today. So this notion that market size matters less than the change in the market size over time. Great teams are necessary, but not always sufficient. I've seen great teams lose in crummy markets. I've seen crummy teams win in great markets. I almost see it's always the case that crummy teams in crummy markets lose, but that's pretty obvious. With respect to the product, because technology is becoming more and more pervasive, because I think so much of the stack is provided for developers today, and so much of the innovation is happening at the kind of the top level as you interact with users. It's fascinating for me to see, and it's humbling for me to see as an engineer and product development person myself, that the best product doesn't always win, and that sometimes being different, being provocative, is more memorable. When you have products that sort of polarize people, everyone's talking about them. And so this notion of being different is oftentimes is perceived as better. And so think about that as an axis or an opportunity for you to exploit. I talked about empathy and distribution. And then the thing no young entrepreneur wants to talk about is ultimately great businesses actually do have to generate great gross margins and cash flows. I mean, you may be lucky enough to be acquired by a company before you ever have to get real on this, but if your goal, and it may not be your goal, but if your goal is to build an enduring business that's around for decades, someone's going to have to figure this out. We as investors don't have all the answers, never have all the answers. I think in these companies, and these things evolve over time. Google is a great example of that. It's had no business model until it effectively stole it from Overture. And there are plenty of examples. Facebook's doing the same thing with mobile monetization strategy today. So the business models can evolve over time, and if you live long enough to build one, that's a good thing. But keep in mind, you do actually ultimately want to have great cash flows, great gross margins. So with that, maybe I'll hand it off to you all for some questions, and then we're going to do the exercise, right?
That sounds good.
Cool.
So questions for Steve?
Steve, thanks for coming in. My question is around what your perception is of opportunities to invest outside of California and outside of the United States. So you mentioned at one point looking for markets that aren't necessarily there yet, right?
Yeah.
And markets that are growing. Well, you could characterize certain foreign markets as being good examples of that.
Yep.
Other people might argue that venture capital is a very local business. You want to be able to grab a sandwich or a coffee with the CEOs of and the CTOs of your companies. So curious what your view is on all of that.
For us as a firm, the vast majority of our investments are still in California, many of them within a car drive of here. And that's certainly how the industry began. I think it's absolutely the case that there are, to Tom Friedman's world is flat, there are more and more interesting things happening internationally every year. And there are, to your point, some incredible new markets emerging. I think the struggle for investors in some of those emerging markets has been, won't be this way forever, has been their ability to rely on those economies to be stable and to be, I would say, sort of predictable and biased towards openness, transparency, and fairness. There's some concern, I think, in certain parts of the world that you may be able to invest, but you might never get your money back. And I think we take for granted here in this country that there are laws and there are frameworks and there are sort of just standards around engaging and investing in young companies, and as investors sort of turning those young companies into real companies and big businesses ultimately, hopefully. So I think it's just a sort of on a case-by-case basis. We're seeing a lot of interesting things happening in India right now. We have a handful of investments there. There's a more well-worn path of predictability there than in China, in our experience. And then we're seeing some interesting things happening in Latin America. Europe is, there's lots of great engineers there. It's typically, at least from our perspective, and again, we have a handful of companies that have been there, there's just been less entrepreneurial activity, more risk aversion, and just less new ideas developing. But again, when I go to China, which is usually once or twice a year, I'm just fascinated because I just feel like it's the most entrepreneurial economy that I've ever been a part of. I mean, it is it's fascinating to sort of see that happening in real time, and I hope that the right kind of constructs can form around it so that they can benefit from that.
And if I may follow up, do you source deals there, and or do you receive pitches and business plans which you then evaluate, or
Yeah.
are you sort of, as a firm and as an investor, holding off making those visits a couple times a year?
So because we're early stage focused, we in most cases want to have a direct relationship with the founder. In most of our Indian investments, we knew the founder before they were one of our portfolio companies, and we oftentimes engage a local investor there as well. That's sort of in close contact with us. We source and review business plans from all over the world, and I think it's really for us, it's just about evaluating whether we can make the commitment to be the resource to those companies to help them, particularly at the youngest stages, build their management teams, help them think about market engagement, help them with introductions to customers. That's just harder to do when they're on the other side of the world. And so while we review those, and it's with, you like to think your bar is always the same height. I would say that our international investments, the bar is just simply higher. Yeah.
So you talk about sort of the problem in the industry right now that entrepreneurs just aren't tackling the big problems. And to me, I'm kind of curious to get your opinion. Do you think that venture capitalists and angels really have the appetite for big ideas? Because it's my belief that the reason why we have all these small ideas is because of the angels and VCs that continue to fund them. If they wanted big ideas, they'd stop funding small ideas and then force the industry to move that direction.
It's a great point. I was hoping it would come up because then I can blame somebody else too. So I think there is a a massive movement, and it comes, by the way, it's not just in the investment community, startup investment community. I think it flows all the way back to institutional investment committee. In fact, we look at many of the university endowments, the investment committee or the CIO, the chief investment officer, in many of those has gone from being a private market, long 10-year horizon. We're thinking about really finding the right partners over the next several decades. Have shifted towards folks who had public market experience, hedge fund experience, looking at 20% returns over 2 years, skewing towards different parts of the market. So I think there is pervasive short-termism, is what I call it, across the board. And so I think it sort of pervades many of the interactions, and I completely agree with you. I think there are many investors who are just looking for these very quick flip, twitchy outcomes, sell the company to Twitter for $40 million next year. I think that's going to always happen. I think there are going to be folks who sort of skew towards that. I do think that I think venture investors, the cycles happen. Sometimes they're forced upon them. Sometimes they actually just happen organically. Are spending more time looking a little bit further out over the horizon, asking some of the questions that I asked. I have an investment in a very unusual materials company that people tease me about in our shop because it's too crazy to talk about in most cases. And so we try to do a little bit of that. You wouldn't want to do all of that because I think from a portfolio theory effect, it'd be tough to. You'd see average returns go from 10 years to 20 years, and we can't live with that. But I think your point's a very valid one, and I think across the board we need to be kind of looking out a little bit further instead of little apps to maybe bigger problems. It's a great point. Yeah.
Thanks. On your last slide, you mentioned empathy and distribution matter, and you talked a little bit about empathy and user design. I'm interested in hearing more about the distribution piece, and especially for some of us who have business backgrounds, how we can really add value in that, and if you can provide some examples of where distribution has won.
Yeah. So distribution, I guess that's sort of the catch-all for how do you find customers. And it obviously depends on what your startup is doing. If you're consumer-facing, you're launching with some great PR on TechCrunch or GigaOM or one of these guys, and then the cricket noises 2 days later when you're hoping that everyone comes back. And I think what I would suggest for you in the sort of consumer context is we know so much more today than we did 4 or 5 years ago about how do you create an experience for the user that reinforces network effects, that sort of makes these products naturally viral. And it was fascinating for me while I was running Ning, because we were running product at Ning, because we were doing lots of experiments at the time. And when you get that viral coefficient to be greater than 1, you literally see, you see the snowballing effect. And it's a much more analytical process. And so looking to make your product naturally viral, to sort of build sharing in from the beginning, to reduce friction on the user sign up. Every field that you add, it's like another, and it's not a linear function, it's a nonlinear function that sort of shies more users coming away from you. So I think that's sort of in the consumer construct. And then in the sort of more traditional, how do you engage the market, a lot has evolved in the last decade as well there. There are still startups. I met with one yesterday that has an enterprise sales force and sales comp plans, and Chuck Holloway, whose office used to be upstairs and who was sort of my independent study advisor, has these incredible analyses around what does it mean to sort of bring on a sales exec, how long before they're effective, how much revenue they bring in, how do you think about comp plans. So there's lots of stuff that has to do with that. But even that, and how you kind of build some early momentum with free products that start to seed the market and maybe address a different customer base, but that creates some virality and some noise around it, are other areas. But I think distribution, boy, it's a tricky one to kind of capture in one point. And all I can say is, if you wait to the last minute to spend time thinking about it and you try to, like empathy, bolt it on, you'll more than likely stub your toe and waste months and lots of money doing that. So those are sort of maybe 2 quick thoughts. I'm happy to talk more about it as well. Yeah.
Hi there. Does this work? Oh, it's for the camera. Okay, good. I was just wondering, you mentioned mobile as a big sort of disruption that's happening. What other trends are you seeing now or in the future that you think will be big disruptions?
I mean, I think we're seeing, and maybe I'll pick a couple of examples across a few different practice areas. So in certain parts of industrial or clean tech, broadly speaking, where it's been beaten up largely a function of things like Solyndra and frankly, I think just a general pause in the market around making large infrastructure investments, natural gas being what sort of feels like going to be cheap for a long time. But there are pockets of really interesting things happening. So I talked a little bit, or I mentioned Ed and Lynn from Sunrun earlier. That company is innovating around business model innovation. There's no technology risk whatsoever. It's about how do you make a product that's more cost effective for end consumers and has a high upfront cost. Hugely disruptive, massive market. I mean, there are 22 million solar addressable homes in only 15 of the 50 states. And all of residential solar today is probably 250,000 homes. So like we're just scratching the surface of this enormous market opportunity. So that business model innovation in downstream solar, it's sort of hard for many folks to even say the word solar without pulling back a little bit because of so much that's happened. But we're seeing bright spots. SolarCity's IPO has gone well so far. Sunrun's doing phenomenally well. So I think business model innovation around clean tech is going to be something really interesting thing happening. We saw that, by the way, in other aspects of energy efficiency. Lending Club in financial services, obviously a different company, but again, business model innovation happening there. Peer-to-peer lending, huge market opportunity. I mean, consumer lending is a $3 trillion market, and people are tired of spending 18% on their credit card bills and want to aggregate those things and would love to spend 10 or 11%. And then there's all the lenders who'd love to get more than 1% they'd get at B of A if they put their money in there. So I think business model innovation is a huge area of opportunity in consumer and clean tech and a whole bunch of areas.
You talked about how the best products come from markets that didn't previously exist. And then Paul Graham actually has an essay where he talks about how small or non-existent markets actually indicate how the product being built may not have a demand in the future. So I'd love to hear, one, what do you think about that statement? And then also, if you have any examples of companies foundation capital's invested in that didn't have a market at the beginning and became a success, and then maybe what percentage you guys invest in non-existent market companies versus like proven market existing companies.
Yeah, there's plenty of Goose Egg Markets out there. They don't all evolve into $0 billion markets, and I think the sign of that is if you're the only company doing what you're doing after a while, and you feel like you've done everything right, then there's a sign there, right? And so I think maybe a good example to your point around sort of markets that didn't exist. So it was before my time at Foundation Capital, but Netflix was a pretty crazy idea in 1998, I think, is when Reed came up with the concept. Maybe it was 97. And he was pissed off that he had to pay a very high late fee. In fact, so pissed off he didn't even share how big it was with his wife, that he thought, there's got to be a better way. And he was just tired of that, what sort of felt like just a crummy service. And built that product when we invested. It was a couple $1 million in revenue, and again, sort of like you're shipping DVDs through the mail, and of course it's all video or mostly video distribution today. That's a positive example. I think one that's maybe a little bit less obvious. We have a company based in Salt Lake City called Venafi, which is doing managing your keys for data center security, and by keys, not physical keys. Obviously, these are sort of all interfaces between load balancers, routers, servers, and when we invested, my partner Bill had conviction around, look, security is going to matter a lot. It's going to matter a lot for the existing enterprises as these new things like Dropbox and Box.net were coming online. Ultimately, CIOs are going to say, how secure is this thing? And he was right. He was also about 3 years early. And so, the company struggled. It misplanned for several years. And we were concerned that, maybe this is one of those zero markets. Maybe we were wrong. And they're killing it right now. I mean, absolutely knocking the cover off the ball. Grew 3x last year. Will probably double again this year. And so sometimes you're just too early. When I was at IDEO, my last project was Cisco's voice over IP phones. It was a fantastic project. What I didn't know is, 15 miles away, ShoreTel, which was a foundation-funded company, was also working on voice over IP phones. It was a successful IPO. It's a public company today, but we invested probably 5 years, or Foundation invested probably 5 years ahead of the market. And oftentimes, you overestimate the impact of a technology in a 2 or 3 year period, and you underestimate its impact over a 10-year period. And I think it's an important thing to figure out whether you're early, whether it's a zero, as you asserted in some cases, or as Paul asserted in his blog post, whether you're early, and it'll ultimately emerge into something more interesting. And that happens all the time in venture capital. Yeah.
Steve, thank you so much
Yeah.
for...
Yeah, you bet.
For more, please visit us at stanford.edu.